Hey everyone, and welcome back to another Q&A video. Last week on my community board, I asked you for some questions and you guys came through with a ton of questions, so many that I couldn't just do one Q&A video. I had to do two. So today is the second video. I'm definitely recording this on a different day. It's definitely not immediately after I recorded the first one. But with that said, let's not waste your time. If you enjoyed today's video, make sure you leave a like on the video, hit subscribe if you want to stay up to date with content that I post in the future. But with that said, let's jump into the first question. The first question here is, what are NFTs and smart contracts? How to learn about it completely? What are essential things and matter we should know before investing in that? Yeah, I mean, I know what an NFT is, kind of. It's a non-fungible token, right? Look, I have no idea about NFTs or smart contracts. I'm not the guy you want to come and ask about cryptocurrency or blockchain or anything in relation to that at all. I don't particularly have any interest from an investing perspective in those things. I watch videos about them and I'm curious about what is happening in that space every now and then, but not enough to kind of talk on the topic. But yeah, from an investing perspective, I like investments that produce cash flow, because investments that produce cash flow, and ones that not just produce cash flow, but ones that produce cash flow in a consistent and predictable way, those businesses can be valued. You can figure out what they're worth intrinsically. When it comes to things like NFTs, you're talking about perceived value. It's speculative by nature, by the fact that it doesn't actually do anything. You have to sell it to somebody else in order to make money on that investment. That is simply not true with other types of assets like businesses. If you own an entire business and it produces cash flow, then you don't need someone else to buy that business from you. The business produces cash flows for you. And the same thing is true for property. So those are the kinds of assets that I like to focus on. The next question here is, how do you allocate the cash part of your portfolio? Selling puts, bank, short-term bonds. So I definitely don't invest in short-term bonds. Bonds are terrible now anyway. I mean, the difference between putting money in a savings account and in a bond is extremely small at the moment. And of course, if you have money in a savings account, a high interest savings account, you can pull that money out at any time. Whereas if there is a collapse in the bond market, which may very well happen as interest rates rise, you have to wait for those short-term bonds to expire. You can't just get out of them immediately. I mean, you could get out of them, but you'll be getting out of them probably at a loss. So I just keep my cash in a high interest savings account. And that is getting me pretty close. Some months it's even more than what you can get on a bond. The next question here is, how do you remain calm when the market is overvalued and going up while sitting on a large percentage of cash relative to your portfolio, while smart money is moving money in and out of sectors, pushing some up and crashing others down? Yeah, I don't know how you remain calm specifically. I mean, I have my principles down, and I know that there are going to be periods of time through investing long periods of time where markets are just not offering good deals. I mean, and that's okay. I think of investing very simply through the lens of Warren Buffett's punch card, right? If you have a punch card of 20 businesses that you invest in over your lifetime, and that's it, then that's the way that I think about investing. And if you take that, I mean, I'm less than 25 years old, so that means I have way more than 20 years of investing to go. So that 20 stock punch card means that I would still be looking for one great business, one great investment, less than once a year. And at the moment, so far through the last 4 years, it's been about one per year. That's pretty much what I've been able to find. There was multiple in 2020 because the market kind of offered that opportunity, but on average it's been about one per year. So I'm in no rush. I understand that there's going to be periods of time, especially when there's a lot of stimulus and really nice monetary policy for stocks, low interest rates, a lot of quantitative easing, that sort of thing, a lot of bond purchasing. When that is going on, the stock market is going to be frothy, and you have to be patient. That's all you can do. I know what businesses are worth. I know a group of businesses that I understand. I know what they're worth, and their prices are higher than what they're worth. So it's very easy for me to to not invest in those businesses. From my experience, I think a lot of uncertainty about the markets and emotional behavior in the markets really stems from just not investing in things that you don't understand. I think people invest in these businesses that have big names attached to them and they're growing really fast, things like Amazon and Tesla, but they don't really fundamentally understand what the business is worth, and that is what drives their emotional behavior in the markets. And if you just stick to things that you actually understand, so that on a deep level or you have a very good idea of what is reasonably going to come out of that business, then it's very easy to sit out as these businesses get higher and higher and higher. The next question we've got here is, what is a stock you would love to buy but is too overvalued? And then there was a little reply here that said Monster, and that's pretty good. He's done his research there. No, if I recently put out a video talking about Monster Beverage Corporation. I think they've done an amazing thing to build an amazing business in the energy drink space, and I think they're going to be a very, very powerful business for a long time. But unfortunately, a lot of people can see that it is a very, very powerful business. So there will be there would need to be some serious correction in that stock if I was going to invest in the business, but I would love to own that business one day. And who knows, maybe it'll be similar to a Coca-Cola, through the 60s to 80s, where most of the time Coca-Cola, for most of its life, it was overvalued. It offered a low return because everyone could see it was such a great business. But then there was a very brief period in the late 80s or early 80s, I think it was. No, it was late 80s. There was a brief period where the stock got reasonably cheap. It didn't get incredibly cheap, but it got reasonably cheap, and that was when Warren Buffett invested in Coca-Cola. So maybe there will be an opportunity like that at some point in the future for Monster Beverage, but we will see. The next question here is, do you guys ever sell puts, that's put options, to get a stock at a cheaper price? I've never done that before. I've considered doing this, but the stock, in order for there to be, for you to be able to sell put options at a reasonable price to earn you a premium while you're waiting for the stock to go down, the stock would already need to be pretty close to the price you were willing to pay. And at that point, I would just rather buy the stock. If my buy range for a business is $30 to $50, and the stock's at $55, rather than just selling put options to generate income until it falls below 50, I'd probably just buy it at 55. My buy range, whenever I come up with a buy range, when anyone ever comes up with a projection of where the business will be in the future, it's an estimation. It's just an approximate range. So when a stock, gets anywhere near that range, that's when I'm willing to start investing in the business. So it's not something that I've done. And, if a business, most of the businesses on my watch list are not, 5-10% away from being a buy. Most of them are 30-40% or maybe even more away from being a buy. And at that point, you just can't sell put options when stocks are that far away from your buy range. The next question here is your biggest mistake in investing. I think the biggest mistake, and this has kind of been true for a very, very long time now, was when I first invested in Thor Industries. I correctly identified that it was a great business. I still, from then and today, think it is a really great business, clearly, as it's the largest investment in my portfolio. But what I did wrong at the time was I misjudged the value of the business. So my first initial investment in the business was much higher than I would be willing to pay today. I misjudged how cyclical the RV industry really was, and the point at which I was investing was literally the tippy top of the cycle for the RV industry. And the result of that was that my projection forward was extremely unreasonable. From that point onward, from that peak where the stock was and where the business was, I should have been projecting much, much more muted growth or even negative growth from that point. And the good thing was, after the stock corrected, it gave me a chance to look back at the valuation, see if I had done anything wrong. And it was through that process that I went through and read every single annual report going back to, I think, 1994, which is as far back as I could find. And I learned a lot about the industry, learned a lot about the business, and now I am much more confident in my approach to valuing Thor Industries. So it was a mistake, but it was kind of a blessing in disguise because it really made me want to dive really deep into the business and figure out what it is really worth. And now going forward, I feel extremely confident in my ability to figure out when is an appropriate price to add more and stockpile more of that business. How come most of your videos have been about doom and gloom? I don't mean to do it in that way, but I think here's my perspective. Whenever I open my YouTube homepage, because I browse around and watch a lot of investing and finance content, 90+% of the content that I see is people trying to suggest that there are so many undervalued businesses, that there's, here's 10 stocks that, are less than $5 each and you could buy them this month, or here's a 10x stock opportunity. This is what I see in 90+% of the content on YouTube. And when I look at what the market actually looks like and what I'm looking at when I'm looking at individual businesses and analyzing them, that is not the case. It was actually the complete opposite. I'm finding it extremely difficult to find anything that reflects even a reasonable investment return in a business that is a good business. And the result of that really is that a lot of my businesses are a reaction to these other a lot of my videos, not businesses, a lot of my videos that I see, that I produce are kind of a reaction to these really overhyped videos. And I think having a balance between those two things is important. And then the last question that we're gonna answer for today is, would you consider purchasing a small cap, $1 billion in market cap or less, or do you generally want mid-large caps? And also why? Yeah, I would absolutely consider buying a business at any size. I think the size in of itself doesn't matter. I really didn't mean to say it in that way. But yeah, the value of the business itself, whether it's 100 million, 500 million, 10 billion, a trillion, that in of itself doesn't matter. However, considering my approach to looking at businesses that have a long proven track record of having a deep competitive advantage, it tends to be that I lean towards businesses that are higher in market cap than $1 billion. But that doesn't mean that I would never invest in a company that's less than $1 billion. And it also depends on the kind of the size of the industry, right? I mean, if I'm looking for a deeply established business in digital advertising, then I'm going to be looking at 100 billion plus market cap businesses. I'm going to be looking at Google. I'm going to be looking at Facebook. But if I'm looking at, a much smaller industry, or maybe a fragmented industry, say the restaurant industry, for example, which is it's large, but it's very, very fragmented. There's a lot of smaller players. Then even some of the biggest restaurant chains are going to, even as they mature and become really big restaurant chains, they're only going to be, 10, 20, $30 billion in size. So that means that, there's an opportunity to invest in those businesses in single digit billions, even after they have a significant track record. So there's kind of a number of factors that go into it. The size itself of the business does not influence my decision. I just want to see a track record. I need to see that there's a deep competitive advantage. I need to see that there's a great management team there. And it also needs to be at an appropriate price. That's the other thing that tends to happen with businesses that are really, really small, is generally they have a lot of growth opportunities. They have a lot of promise about going from being a tiny business to being this huge company. And as a result, they tend to attract a lot of speculators, and stock prices are generally a little bit more expensive than companies that have a longer track record and maybe less growth in front of them. But that's all we had time for today. I hope you guys got some value out of today's Q&A video. I'd love to hear your thoughts down in the comment section below, and make sure you leave a like on the video. If you got some value out of it, hit subscribe. I said this in the last video as well, but Merry Christmas and have a Happy New Year. I'm taking a break this week. I pre-recorded this video, so I could take a week off, but I'll be back next year, and I'm excited to pump out a ton of content in relation to investing news and education. So if you want to stick around, make sure you hit that subscribe button, hit that notification bell if you want to stay up to date with content that I post in the future, if you want to be notified about content that I post in the future. But with that said, hope you guys have a great day, and I'll see you in the next video.